Pretty good. I feel pretty good. We'll get to individual stocks later, but to your question, unfortunately, same as the last year, right? We got to talk about inflation. We got to talk about the Fed. But the one thing that I would say is very different from when we hit those October lows or those early summer lows is inflation seems to me clearly on the way down. You've got a Fed that's a lot closer to the end than it is to the beginning of its rate hike campaign. And you've got an economy, Scott, that's hanging in there. And it catches me by surprise, too. But yesterday, the Atlanta Fed GDP Now estimate for the fourth quarter was revised up to 3.9%. You're going to say, Scott, and I'm going to agree with you, but that's now and what's going to come. I mean, we shouldn't expect 3.9% in the first quarter. That would really catch everybody by surprise.
I wasn't going to say that.
The main point.
I was going to say, get to the point, answer my question. Are we going to retest the October lows or not?
I'm setting you up for the answer, which is I don't think we are. I just see a much, much better economic and Fed set of conditions than when we were there in October. It's just that simple.
Carrie?
Well, we've had since mid-October 3 higher lows. Okay, technically speaking, the market is trying to set itself up for some continued strength. Now, I know that it was making lower highs since the beginning of last year, but this is a trend, honestly, since mid-October that feels like this is the type of day that would support saying no to the market going back to those lows because, you know, we're getting around this 3,800 level back and forth, but we're not going back to 36, 3,500 so easily. The market seems to have some buyers at this level, and a day like today proves that point.
Jenny, UBS says you're going to have a sell-off into Q2. 3,900 is at the end of this year, so basically where we are right now. It seems to be kind of the prevailing thought, right? You have trouble in the first half, you rally back in the second half, maybe you end up break even, maybe you end up higher, depending on whose target you are looking at, who is right now at the highest end.
Right, so I think that 14.5 times $220 earnings and bringing us back to 3,200 or to 3,200, I think that's plausible. I don't think it's probable, but I think it's plausible.
What's probable?
It's hard to
That's
say
what
this
I'm trying
year.
to get at today.
Yeah,
What's
I think
probable?
so. I think what's probable is that 81% of the time after a down year, the market's up. And so I think I think what's probable is that we're sitting here in a year from now and we've had a positive market. But the in between now and then is going to be very humbling and very hard and a lot of hard work. And I can see us testing highs, I can see us testing lows. I just think it's going to be a year of digestion.
Okay.
You know, like if last year was a year of reckoning, this year's going to be a year of digestion. And it might be where most of 2023 is actually spent looking forward to 2024 and anticipating what comes there.
Is it going to be indigestion, Joe, is the question for the big mega cap tech stocks. And that's where I'm going to pivot right now, because I mentioned at the top of the show, if it was Apple.
I don't get the same.
No, because I've talked to you a million times recently about the market.
I'm sitting here doing math.
That's right. I've gotten your market view a lot lately, and I want to pivot you to what is certainly one of the stories of the day, and that's Microsoft. And I'm pivoting to you on that because it is the worst Dow stock today. It's the worst S&P stock today. And it was one of your picks yesterday in our stock summit, to which I asked you upon your entrance to the building today if you wanted to reconsider and perhaps petition us for a redo, to which you said no. Well, yes, it would be a petition because we'd have to decide, and me as the judge would have the ultimate ruling on that, and I don't think you want to know how that ruling would go.
Yeah, no, I just don't want to go through a full trial.
So what do you think here? Right, it was downgraded today. This is a big deal, okay? It was downgraded today. It's our call of the day, and we bumped the call of the day all the way up for obvious reasons. Too neutral from buy. Price target goes to 250. This is at UBS from buy. And it's about Azure, and it's about the slowing growth engine. One of the principal reasons why people were willing to pay a higher multiple than historically averaged for Microsoft because of that growth in the cloud. What do you think?
So what I think is that if you have high conviction in a stock, if you have a belief that you're owning a stock because it's going to provide you a conservative allocation towards a select group of stocks that you think potentially could have a recovery, the best thing that can happen is that expectations get lowered. And that's exactly what happened here. So I feel even better about it. I feel better about the fact that we're marking down what we believe the earnings growth for the most significant component of the business, the component of the business where the growth and the revenue appreciation has been catalyzed over the last several years, and obviously that's Azure. So I feel great about it. I like lowering expectations. It does not change my view at all. This is the most diversified mega cap. The NASDAQ is 4% above its October low. The NASDAQ is going to take out its October low at some point. And in that type of environment, I want to own Microsoft above the other mega cap.